What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be talking about a stock that I don't really talk about on the channel, and that is 3M. 3M had some interesting news come out today that shot the stock up over 5%. So what I want to do in this video is I want to go over that news, how it could impact 3M stock. I want to take a look at their revenue, their EPS, their outstanding shares, their free cash flow, and even their valuation, and really give my overall opinion on 3M and whether it's a buy, sell, or hold. So if you're into the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. As I mentioned, 3M is up over 5% in a single trading day. If we look over the last month, the stock is down over 6.5%. Over the last 6 months, down 5.5%. Year to date, this stock is down 15%. If we look at the last year, down 17%. Over the last 5 years, this stock is down 50%. And if we look at the max chart, we can see that 3M peaked out around $258 back at the start of 2018. However, since then, the stock has traded down almost 60% to where it is trading at now of $104. And the stock jumped up over 5% today on reports that it reached a $5.5 billion settlement over its earplug lawsuits. The company is expected to pay $5.5 billion to resolve the litigation on over 300,000 claims that its earplugs resulted in hearing loss. And this resulted in over a 5% move up in the stock price for 3M because analysts were anticipating the lawsuit to come in anywhere between $10 to $15 billion. And this would be the second major settlement that 3M has reached this year, the first coming back in June, where the company agreed to spend more than $10 billion to help municipal water companies address so-called forever chemicals. And these lawsuits over the last couple of years have created a lot of drag on 3M's stock price. We can see again that they are down 50%, and as we start moving past some of these lawsuits, I would expect the stock to begin to start recovering. For the last couple of quarters, we've seen 3M report very solid numbers. They reported their most recent earnings on July 25th, and we can see that analysts were expecting them to come in with EPS of $1.76. They actually reported $2.17, which was a 23% beat. If we look at revenue, analysts were expecting $7.8 billion, and they reported $8.3 billion, which was a 5.5% beat. In terms of revenue, we have seen them decline over the last couple of years. Back in 2021, at the end of the year, they were bringing in $35.3 billion for trailing 12-month revenue, and we could see that it's down around 10% right now. They have dropped all the way down to $33.05 billion in revenue. However, we also see a similar trend throughout the years where they have a little bit of cyclicality to their revenue, where it goes up, spikes, and then drops down, goes up, spikes, drops down, and then we're seeing that again here. Hopefully 3M again can turn things around here. One of the things I anticipate that is hurting 3M right now is the lack of building. They produce a lot of supplies that go into building new homes, new office spaces, and as that has died off over the last year or so with higher interest rates, that will negatively affect 3M's revenue. In terms of EPS, they also have a very solid track record of just continuing to increase their EPS numbers. We can see that back in 2013, they were bringing in around $6.39 in EPS. To today, they're bringing in around $9.68. So we're seeing about a 50% increase in EPS over the last 10 years. If we look at the most recent quarter, we could see that they had a quarterly result of minus $12.35. So if we take a look at their most recent earnings announcement, we can actually get a better understanding of where this loss comes from. So this $12.35 loss comes from the settlement that they agreed to on their forever chemicals. So that settlement equates to around $10.3 billion that is payable over 13 years and has a negative impact per share of $14.19 for this quarter. So that is a little bit why non-GAAP earnings can be helpful in certain situations. So when we actually take away this loss, we can see that their adjusted earnings comes out to $2.17. So that is a little bit more realistic of where you would expect the company to be trending. However, it is important to note that they did incur this $10.3 billion loss due to the settlement of this lawsuit. And we will likely see them report another quarterly loss this quarter as they just came to an agreement on their earplug litigation. Even though 3M's revenue has been relatively flat over the last decade, if we look at their earnings per share, it has increased in a more significant manner. And one of the ways they have done that is by decreasing their shares outstanding. Back in 2013, they had around 0.7 billion shares outstanding. Here today, they have around 0.55 billion shares outstanding. And if we look at the year-over-year change, they have been able to decrease increased their shares outstanding every quarter by around 2.5% to 3%. The only time that we see a significant increase was in 2021, where they did have a slight increase in their shares outstanding. In terms of free cash flow, if we look back in 2013, we can see that they were bringing in around $4.3 billion in free cash flow. If we look at 2021, it was about $5.9 billion. They did see a dip down in 2022 where it dipped to $4 billion. I do think that's probably a short-term issue, and they'll probably get back to where they've been trending at over the last few years of anywhere from $5 to maybe $5.5 billion. But that is something that I'd like to see before I would personally get into this stock. I want to see their free cash flow getting back up into this $5 to even $6 billion range and show continued growth in terms of overall free cash flow. So I did want to discuss valuation. We talk about this a lot on the channel, but I want people to keep in mind the differences between 3M and a lot of other companies we talk about. When we're talking about 3M, we're talking about a company that's revenue is growing at a very slow pace. Its EPS we're seeing some strength in, but a lot of that has to do with buybacks, and free cash flow is traded basically sideways over the last decade. So when you think about a company like that and their valuation, it should be at a lower valuation than, let's say, something like a Google or Meta that has a lot more growth in front of it. So in my opinion, 3M should reasonably trade anywhere from probably a 13 forward P ratio to a 17 forward P ratio. I do think at times we could see it go up to maybe a 20, and a lot of that has to do with the strength of 3M's dividend. But right now there are a lot of question marks around whether that dividend will be around in the future due to the litigations that they're going through. And if we look at that dividend, we can see that they are currently paying out around $1.50 in dividends per quarter, and that equates to around a 5.7% dividend yield. So personally, am I buying, selling, or holding 3M stock? Currently, I do not have any in my portfolio, and I don't plan on adding it as of right now. It is a company that I have on my watch list just to keep an eye on because I think it presents a very interesting buying opportunity. They have a very strong dividend yield of 5.7% right now, and to be able to get into a company like 3M that has over 50 years of dividend history and being able to grow their dividend over 50 years shows a lot of strength. And I think these litigations that they're going through right now are just a short-term issue, and I think overall they could easily get back to growing that dividend and continuing that into the future, and I think that would be a very positive thing. But if they were to cut the dividend, I think this stock could easily fall another 10 to even 20% just from the amount of dividend investors that would be getting out of the company. So right now for me, 3M is just a watch list company. Maybe in the future I will add it. I do think there are a lot of interesting opportunities this year in dividend paying companies as a lot of their valuations have been hit and we've seen their stock prices fall. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.